Crowdfunders on Share Radio.
Hello and welcome to Crowdfunders, the show that covers peer-to-peer lending and all other forms of crowdfunding. My name is Ed Bowsher, and in today's programme we're going to talk about the FCA's new review of the crowdfunding sector. I'm joined now by Roger Gewolb, who is the co-founder of the Campaign for Fair Finance. Roger, thanks very much for coming on Share Radio today.
My pleasure. Thank you for having me.
And just quickly, can you tell us a bit about the Campaign for Fair Finance that you founded?
The campaign, which I founded with my co-director Ross Balmer back following the credit crunch in about 2012-13, came out of the despite the accent, I'm British as well as American. I've been here for decades in the city, in the consumer finance business. We've always worked with financially challenged people in the sense that I happen to have founded the industry in this country that got money for people to get cars who couldn't readily get loans to get cars, which has grown into quite a large industry. And so we understand the non-prime, subprime, financially challenged, rate for risk, whatever you want to call it, demographic.
Sure.
Extremely well. And the things that were being done to these people and more prime borrowers following the credit crunch by lenders, by banks, finance companies, and the rest were quite horrendous.
So you've been campaigning against that, basically?
We campaigned to push, by lobbying, by market-led example, and by simple pressure and obstinacy, fairness back into the agenda wherever we could. So we work with the Archbishop of Canterbury on payday. We work with, I'm an advisor to the Law Commission on reformation of some old laws, that sort of thing.
Okay, great. So let's now turn to the crowdfunding side of this. And so Andrew Tyree, the chairman of the House of Commons Treasury Committee, he's had some concerns, and I think that may have at least partly sparked the FCA to announce they're thinking about doing another review. If we start by looking to at the peer-to-peer sector, sites like Zopa, Funding Circle, Rate Setter, Roger, do you think these sites need to change in any way, and do you think they're a positive force in UK finance?
Well, we've been banging on about this for quite some time, and when the lending club, peer-to-peer lender in New York, went pop some weeks ago,
yep,
we were brought in by the media to do a lot of different things, one of which we had some articles in the Mail. Last Friday, the 1st of July, I had a debate on Radio 4, You and Yours, with one of the co-founders of Zopa. We've had concerns about this industry for some time, and we voiced those concerns, and following the Mail articles, Andrew Tyree, who always, together with the Treasury Select Committee, does a splendid job, not necessarily as a result of anything that we said, but he did come out and say the FCA should be doing more, and lo and behold, the FCA did come out and say they are going to. They've now issued a call for consultation. They also mentioned that, of course, this was something they had planned to do 2 years ago when they started licensing these firms. Doesn't matter whether they did or they don't.
What's wrong with the likes of Zopa and Rate Setter right now?
Well, I can't single out any particular company, but the concerns that we have about the crowdfunding industry, let me start by saying we have less concern about the equity-based get a T-shirt, get a cup of coffee industry, because that is fairly replete with health warnings, where the customers are told the kind of risk and they have to sign and so on and so forth. And I think most investors, even if they don't understand the actual degree of risk they're taking, I think they know that this is may I call it play money. They know that they could lose this.
Yeah.
The concerns we have lie more in the peer-to-peer lending market, where the peer-to-peer lenders are actually competing for bank deposits. And we think that it is a very foolish loophole that allows companies to solicit bank deposits without acting like a bank. It's banking light. Secondly, that we don't think that the people who put money into these really understand the risk they're taking. They have no protection if they lose their capital. There is no £75,000 compensation scheme because they're not a bank, they're not a licensed deposit taker.
But isn't the risk relatively low, at least so far? I mean, Rate Setter put out a figure, I think, for their loans in 2014, 2.8% of the borrowers defaulted. So, that's obviously risk, and that was all covered by their protection fund. So actually, for the loans they made in 2014, or that were made on the site in 2014, none of the lenders lost. Now, that may not continue in future, but, that's a pretty good track record, isn't it?
Well, 2 points on that. Number one is we have no information on what standards they use for what's in arrears and what's in default and what makes up those numbers. Number two, they're self-administered and apparently not inspected by anyone outside. Number three, There have been in the press articles very recently about the fact that various firms, provision funds, are not going to be sufficient to cover them. Now, when Lord Turner...
They've been sufficient, they've been enough so far, but in the future...
Don't have the data.
Well, I think they all say firmly that they would have covered all the sites, the platforms that have protection funds, and obviously many of them don't, but I think the platforms that do have protection funds say that so far they have covered all the defaults.
All I can say is that the banks who told you that the subprime mortgages they bought were safe, who are inspected with a fine-tooth comb regularly by the Bank of England, were wrong. Who's inspecting these people?
Yep, it's fair enough.
Now, let me preface this by saying we want crowdfunding and peer-to-peer lending to succeed. We need an alternative to the tired old banks and the way they operate in their ethos. There are challenger banks. There are certain banks doing it differently. My friend Vernon Hill with Metro Bank has revolutionized, along with Lord Flight, the two of them have revolutionized high street banking. Now, these chaps and ladies should do the same thing with the digital world as opposed to the high street world, so we're all for it. But they need better oversight. They need people in an official capacity like the FCA to be monitoring, inspecting what they're doing, and offering helpful advice, not legislate them out of existence, not compliance cost them out of profit.
So you want tighter regulation. You wouldn't be concerned if the Financial Services Compensation Scheme doesn't cover them, or do you want them to come under that?
Well, one of the proposals the FCA has asked for is whether people think it should cover them. Now, if we could have that, then we're very happy.
Sure. And so it's interesting with regulation, the regulation that we've had so far in the peer-to-peer industry. I think it's fair to say my impression is that the government, certainly since 2010, was keen to encourage this industry and get it up and running. Much of the industry got up very quickly, and the government had encouraged the regulators to be relatively light touch in this area because the government thought it was innovative and wanted to get things moving. So do you think, so if I accept your premise that the peer-to-peer industry is under-regulated and there may be a disaster around the corner, should we actually be blaming the government for telling the FCA and its predecessor to sort of go gently with these guys?
I agree completely with the view you just expressed. Lord Howard Flight, who's an expert in these things, has said the great thing about the dot-com crash was that it got all of us onto the internet at least a decade before we would have done otherwise,
right?
Despite all the disasters. Now, the same thing here. So we absolutely do want this to succeed. And yes, there should be more oversight. There should be more interface between the regulators, even if the compensation scheme comes in, because we don't want the taxpayer to end up footing the bill. But what they need is more oversight, more transparency, more inspections. Now, on the Radio 4 program, Jaidev Janardana, the founder of Zopa, agreed with me completely and said that they welcome more of this.
But if you have more regulation, isn't there a danger that costs rise and so the interest rates for lenders fall?
As I said,
how does it differ from banks in the end?
As I said before, we can't compliance them out of profit, but there isn't time to go into all the specific areas of how the lenders operate. But I think that it will never reach a point where Mr. and Mrs. Blogs of Splot will understand the answers to those queries. It's enough that it has a seal of approval of the Bank of England or the FCA on it, who have actually inspected it, monitor it fairly regularly, dialogue regularly with the operators of these platforms, and then we can assure some really great successes, I think.
But the FCA is doing some regulation. Do they never visit the sites? Is that what you're saying? They never visit the platforms? They don't look at the books at all?
I don't know that they don't visit the platforms. I don't know that they don't look at the books, but they certainly don't do what a Bank of England, or in America, a Federal Reserve Bank examiner does, which is to sit down and pore over a sample of... If you're a lending business and you borrow from a British bank, you will probably produce 10% of your loan book every month to their inspectors.
Right.
And that bank will present a percentage of its book to the government inspectors.
Yep.
All the way up the chain.
And that's not happening in the world of peer-to-peer?
Not that we can see.
What needs to happen here?
Well, in addition to the transparency, oversight, and regular examination, we need a minister for consumer protection in personal financial services. At the moment, that portfolio is with Sajid Javid, but he is so busy with Tata Steel and the rest. In Labour, we have Baroness Hayter in the Lords and Yvonne Fauvargue in the Commons, who really know their stuff, but that's a weakened Labour Party in opposition. I do hope that Theresa May will appoint a minister of consumer affairs and consumer protection, something that was considered previously before Baroness Altman was appointed to do pensions instead. They would then oversee, if you will, or work with the Treasury Select, and they would work with the FCA. And that chain of regulation should give the right kind of protection.
That's very interesting. We've run out of time, Roger, but thanks so much for coming on. You've given us real food for thought today. That was Roger Gewolb, founder of the Campaign for Fair Finance.
Crowdfunders on Share Radio.